Okay, good morning, traders, and welcome to this live intraday strategy webinar. This will be our final webinar for 2020. Hard to believe the end of the year is upon us. Lots to talk about. Hey, Jay, Ted, great to see you guys in the room. A quick walkthrough. Okay, we're in treacherous waters, obviously, thin liquidity conditions heading into the holiday. You're going to see a lot of this back and forth price action, and we have. Levels remain clear. Momentum is going to be the biggest hurdle here that we got to clear. So on the menu for today, we're going to review DXY, Euro, Sterling, Dollar CAD, Kiwi Dollar, a quick look at Dollar Yen. I don't really know what's going on there. Gold for sure, Aussie Dollar, and SPX and Bitcoin. Any other questions or trade setups you guys would like to review to wrap up this session, feel free to let me know. Let's jump right in. So as it pertains to, I guess we should just go over DXY first. Here's where we are. I haven't given an update on this in a while. Here's the weekly chart. The focus that we've been talking about for the last 2 weeks has been a break of the 89.90 range, 91 handle right here. And you can see that literally for the last 2 weeks, we've tested the lows, tested the highs, and we did it again this week. A clean example, guys, of yearly opening range breaks. Here was the opening range break we made back in July, back in the dollar index. Here you are trending towards extreme lows, or a new fresh low right into the close of the year. So, you know, there's obviously some divergence here with the last low. Again, you're in an 88.6 of the cent off the 2018 low. That's 89.93. 2017 swing low is a nice pivot in price. That's 91. We're just sitting right there. We're just sitting in that zone. A break to that downside, and you're looking for 88.70 and 88.18. Okay, that's the next major weekly downside targets of a break here. Bearish invalidation now drops to 92.28. So as long as we need to clear this on a closed basis to essentially mark some sort of larger scale reversal in the DXY. So from 1,000 feet up, it's a range, right? 91 into 89.90s. Here's the daily chart reinforcing that range. Okay, so for the next 2 weeks, as we head into the open of 2021, basically the range break of this zone is what we're looking for. Downside break, like I said, 89 would be the 2018 low day close, and then 88.25. Bearish inval still at 92.28. Now, the fake out yesterday, right? There was a lot of noise yesterday in price. Obviously, DXY looked like it had broken out of this descending formation that we've been tracking. Let me just relay that here. Here's what it looks like on the 4-hour chart. So you can envision a scenario again where, false break type scenario, make a dip lower, then rip for a larger turn. End of the day, it's still 92.28 is the bearish inval. These are two topside levels of resistance, 91.30 and 91.90s. I'm still thinking you get some sort of exhaustion here near term, but there's not enough validation. There's not enough evidence to take that trade yet. So we're still on the wait and hold here for the dollar decline. Really, it's just been a one-way trade. A little bit of a hang up here to start the week. You gapped higher, you filled the gap. That puts the emphasis immediately on the weekly opening range. Whenever you have a range gap into the open, the gap fills. That is now your immediate opening range break. So we're looking for a break of this range for guidance. Again, on the upside, 91.30 would give us a little bit more of a swing. So that's where sort of DXY is on whole. Not much to write home about. And the positioning for Euro is very similar. A little bit cleaner in my opinion. Here's Euro dollar from the weekly chart on down. Okay. Levels of interest here. 23.37, same thing as the 88.6 on the DXY. So that's a bit higher, converges on uptrend resistance just higher. And again, the momentum divergence that you're seeing. Right, so weekly chart, same type of picture. Got a little bit more room for a stretch, but you're essentially coming up on uptrend resistance. You're on the daily chart, it looks like this. Okay, real clean. This is the pitchfork we've been following off the yearly lows. Here's the upper parallel. Caught resistance in July, caught resistance in August, caught resistance in September. Here we are again. Here we are again. Okay, so look, if this pops, again, we're testing uptrend resistance. If this pops, expect acceleration, 23.36. The high week close comes in at 24.09. Near-term support, 21.45. Look for a break of the weekly opening range. Here's what it looks like on the intraday. So 4-hour chart, again, just zooming this out a little bit. I usually show you guys a 2-hour, but it's been so tight, right, that I want to just give you a clear reference of where we are in trend. There's that upper parallel. There's a test last week. Here's this week's open, gap lower, filled the gap, puts an emphasis on a break of this here range. Topside breach, 23.36, 24.09 is the 2018 high day close. Last week's low, this is where we opened last week, converges right on that channel support. So anything sub 20 and 21, essentially 2090, would give you the validation for at least the near-term turn in euro. Don't chase. Don't chase here. Questions? Okay. So that is number 2, euro holding right at the highs, looking for some sort of reaction at uptrend resistance. You know, objectively, you could designate that break that we made right there on the 15th or 16th rather as a breach of the monthly opening range high. Would have us looking for a late month high. Now it just so happens that again we're up into uptrend resistance, so I'm not going to press it, but certainly we're looking for inflection here on the long side for euro right at these levels. Okay. So no change to any of those levels on euro. Right back where we've tested this level. So all we've done here, just a quick, again, reminder. All we've done here is we've come into resistance, held, still same levels in focus here. Dollar CAD looks like this. Now we had a pretty radical move yesterday, right into the start of the week. Really nice reversal. Take a top-down approach. Here's dollar CAD from the weekly chart. Really big turn from the 2017 December reversal close. So this is a really nice outside weekly reversal off the highs that we made back in December of 2017. That threshold, that close, ended up being a really radical clean pivot in price all through the 2018 advance. Here it was. We were looking at it on the way down. Probe just a little bit lower intra week, but boy, oh boy, nice hold. Nice hold. So question being now, is this simply a near-term bear market recovery, or is a more important low suggested here? Again, not really much to write about momentum. We're coming up on initial resistance at the objective yearly open. That's 29.75, bearish in about 30.56. Okay, so the weekly levels for dollar CAD are pretty darn clean. From a daily standpoint, here's what it looks like. So this near-term pitchfork we've been tracking just off the highs from September and October, right? Really clean, lower parallel, support, support. Here's a break of the 25% parallel, break of the median line. We failed right ahead of a key region of resistance. And this is the whole kit and caboodle here for me on dollar CAD. You got the monthly open. Okay, you got the monthly open at, what is that, 29.95. You got the yearly open at 29.75, both objective levels, right? Not up for debate, fact. And you have the upper parallel for the pitchfork right there. So that gives you a range of 29.75 into 29.95 essentially as critical resistance for dollar CAD. Now you whisked into that yesterday, we kind of pulled back. We're still in that zone, right? The immediate advance is at risk into this zone. And with the same respect, this zone is going to be your breakout zone. So if we do breach 29.95, that would not only be a break of the yearly open, not only a break of the monthly open, not only a break of the pitchfork resistance, but it would also be a breach of the monthly opening range, an objective signal for a reversal pattern. So I'm not saying we're there yet. I don't know if it breaks. All I do know is the level that we need to focus on is 29.75, 29.95. That's the breakout zone as it pertains to dollar CAD. Here's what it looks like on the intraday. So again, really nice divergence all up into that low. Finally got the pop. Here's the extension missing just yesterday. Good that we're finding, at least on this initial pullback support right back at the median line for the formation. Keeps the emphasis on a break of this slope for, again, that last extended run to 29.75, 29.94. Look for a larger reaction there if reached. Okay, key support weekly opens 27.95, 27.82. Okay, is going to be the 2018 October low. But point being, if we breach this, if we break this to the downside, guys, it's an objective weekly opening range break. So it shift the focus lower anyway. Okay, it just so happens that on the back of this turn, while above that 27.80 level, might have a little bit more upside to go. Questions on dollar CAD? Okay, number 4 is Kiwi. And this is another one, excuse me, I highlighted yesterday just because of the nature of the reversal, where it happened and how it happened. So sorry about that. So the level in focus was this huge resistance zone on the weekly charts for Kiwi. We've adjusted it a couple of times. You'll guys recall that just ahead of that, we had the 2018 objective yearly open that we were looking at, kind of stretched that out. So you're looking at the 786 retracement, the decline off the 2017 decline, and you're looking at the 50% retracement of the decline off the 2014 decline. So a nice fib confluence there, a nice pivot in price. You're seeing price kind of struggle there. Now, this was what, 1, 2, 3, 4, 5, 6, 7 weeks up, guys. We haven't seen that in a very long time. It's not too surprising because, again, this was an objective breach of the yearly opening range highs, give you a really extended move. But, I don't want to chase this from here. Near-term support on the weekly scale is 69.42. If we breach this 71.50 threshold, you still have slope just a bit higher at 72.50s. The bigger level is going to be that 2018 high we closed, 2018 high, right there into 73, 74 basically. But a problem, right? Kind of problematic. Momentum butting right up into 70, right at that former trigger support, now resistance. What do we do with Kiwi? Well, here's what it looks like on the daily chart. Okay, again, that zone offering really nice resistance. Another look at slope for the current operable formation that we're in off the low from March, right? And the high from June, low from October, has this pitchfork, sensational gradient, really clean pivots along the median line. We're there. Okay, the 75% parallel, resistance, 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 that held. And here we are. Monthly open, monthly range lows come in at 70. That's your support. That's the level you need to break to shift the focus lower. So insane tight range, right? It's actually an expansionary range, so it's making some higher highs, but the lows are kind of holding. Not really my favored moves, but again, divergence into the highs, a weak divergence signal in that one of them is, they're both above 70, excuse me. But here's the break below 70, typically going to be a bearish signal, right? Haven't seen that materialize in price just yet, but I think the risk is still there. Here's what I showed you guys last night. Okay, and here's where we are now. So, we had gapped lower into the open. We broke below this key region that we were talking about. Again, 70.93 into 71.10, right? Broke below it, and we tested it as resistance last night. That held. So for all intents and purposes, guys, for all of these trades that are like at critical ranges and it's just a real tight coiled weekly opening range, respect that. It's not the market that you want to start like testing and pre-positioning for the move. This is a very, very clean weekly opening range. It's set up with a break of multi-month uptrend support. Again, you can't make this stuff up, guys. This slope has been radical. Simple high, low, high, simple low, high, low, support, support, break, resistance. If that's the case, should be looking lower. Should be looking lower. Now a basic 236, okay, of the advance is down at 67.70. Okay, that's a ways away from where we are. I'm not looking there yet, but I am looking to see if we get a break of the weekly opening range. That's a move below 70 here, 69.91 as the June low. Would be the onset at least of a near-term move lower. There's not enough, in my opinion, here yet to dictate gradient or slope, but just something I'll be considering. I was looking at this earlier as a possibility. Further highlights resistance right here into 71.10, but a possibility. I'm treating this as a very simple weekly opening range. Once this thing ruptures, I think you get a nice little play. If you take a very quick consideration of what the move lower would be, guess what? 2 equal legs puts you right on, okay, with that 2019 high. Again, that's 69.40. So anyway I measure this, I continue to come up with the same levels. So possibility for a little bit more of a top sign exhaustion play here in Kiwi. Look out below 71. Okay, that is number 4. Let's hit sterling. So what a radical play it's been in British pound. Here's where we ended up, or here's where we came into the start of the week. You know, I saw that breakout on last week. We took out the 2017 high close, we pulled back, and we closed right there at this confluence zone that we've been following at 135. It's 2017 high day close, 2018 open. You know, I'm still kind of the mindset, and I came into the week saying the same thing. I'm still not of the mindset that this thing's just ready to pop. Now, obviously, there's a lot of event risk and a lot of headlines coming out of the UK, and that's going to continue to move this. At the end of the day, the levels still seem pretty darn clean. Okay, let me just take this out for you for a sec. So here, let's start from the weekly chart. Here's where we've been, right? The whole focus was 35. 34.94 is a 2017 high week close, okay? Pivot in 2018, highs for the 2019, highs for this year. On the breakout, here's where we were into the start of the December trade. We were talking about this long-term downtrend resistance. We're talking about the yearly highs from 2019. We're talking about this year's highs, all wrapped up right here, right? Momentum not able to really give us a 60 pop, right? Here we are, kind of really struggling at that 60 level. Not only that, strong divergence, price action with a higher high, the oscillator with a lower high. Really close reference points, both positions for divergence below 70, a decent signal. Okay, we're at uptrend resistance, we're at downtrend resistance on the broader scale. Every way you look at this, and I still am looking for inflection off this. Now, this many inflections, a little more than I wanted, but you can see the reaction we've gotten in this zone. So the weekly chart's a mess. The only thing I wanted to highlight here is you're still looking for 2 basic things, either a weekly close back above 35 or a weekly close back below 32.50, which is, again, this year's objective yearly open and the key 618 of the entire 2018 decline. Okay, so there's a lot of noise. It's sterling, it's classic sterling, throw over, fake out trades all over the place. Here's what it looks like on the daily chart. This hasn't changed, okay? This is the same gradient that we've been following off the advance. A little bit messy on the upside, but look at the slope on the downside too. Look at the low we made here. Look at the low we made yesterday on the collapse. Keeps me still focused on this gradient. Support at the median line, need a close below the objective monthly open at 33.20 to get this thing going. Again, I don't have to highlight to you again one more time the divergence that we're seeing in momentum on the highs. This is huge for sterling. This is huge for sterling. And you can make the argument all you want, deal or no deal, Brexit, what's going to happen. I mean, at the end of the day, yeah, those are the catalysts, but the levels, in my opinion, still remain rather clear. Here's sterling on the intraday. And here's what it looked like at the start of the week. So gap lower, sure. Took out the median line. I was looking for a more prominent reaction there. You got a prominent reaction both tests. The break sailed lower right into the yearly open. The break back above the median line sailed higher right back into resistance at the 2018 open, 2017 high day close. So clean this up a little bit with that spike, but we're basically looking at a weekly opening range right below resistance. Again, 3150 is the break you need to validate a larger turn. This has just been a chop fest range. Again, my humble opinion, not a trade recommendation. I'm still looking. I would love to see a larger washout lower. You know, there's a lot of different factors one could consider to try to give this a little bit more of a tilt or a little bit more of a decorative guidance for the decline. Not there yet. Not willing to work with that slope yet. So sterling, top side, still in play. You're just getting kind of tired here as you run into these resistance levels. Keep your eyes on the headlines for that one. That is number 5. Dollar yen has been a faker. So here's dollar yen. We've been talking about this. Well, we took a kind of a break off this for a while because it didn't really do much, but here's dollar yen on the weekly charts. This fest here of just choppiness was nothing to write home about. Here's the move lower last week, and we're still in that sort of just below resistance, not quite extending into support. So 104.40, 104.12 still key resistance in dollar yen. You know, what is that? Not really the breakdown I would want to try to trade into per se, but man, you know, you're right below downslope resistance. What do you do? Dollar yen on the daily chart looks like this. It looked like it was a neat, you know, a lot of people have been looking at this in a couple of different ways. You know, you could look at this as this was a triangle break, which was kind of messy, you know, on that side. Then we could look at it from this was a triangle break, kind of messy right there. On the downside, didn't give you much play. At the end of the day, this, to me, I interpret it as a monthly opening range break with the move here on the 15th, which has us looking for a late month low. Now, you're not getting much follow through, and that's what's kind of irking me on this, is that you just don't have any follow through. Key resistance and bearish invalidation at this point is going to be right at the monthly open. That's 104.30. Let's go ahead and scratch that. Retracement's null and void. Low's been broken. Levels there for dollar yen. Intraday. Is it some resistance at the 38.2, the 2014 high? Of the 2014 high. In dollar yen? In sterling, Jay. Okay. Let me go back there real quick. I'm sorry. I must have missed that question. So you're looking at basically this 38.2 here, right? So Jay, this is what I'll say, man. For me, it's all about what happens here. Okay. So Jay, if this pops, 30, basically 40 is what you're looking at, right? 39.50, this region right here. Man, in my humble opinion, again, Jay, that would be a conservative target. If this ruptures, you know, I'm looking well above 140, in my opinion. That would be a good initial target for sure, for sure. And we have, again, the 2018 high week reversal close there as well. So it's a level that we're watching anyway. But absolutely, for me, it's going to be all about this break here. What happens at that Brexit gap? Make sense, Jay? Okay, so Yeah, here's dollar yen on a little bit of a different level. Jay, what is yours showing up? Let me tell you something. So I'm using the IDC feed, which does have a different open. Okay, so some of the levels are a little bit off. I do this because Forex.com and FXCM didn't have, when the Brexit debacle happened, they didn't have price data previous to 1990. So you couldn't really do any analysis on longer term trends and scope. So I'm using the IDC data for that reason, that it goes back further, Jay. So your high, low, and your opens might be a tad different on sterling. But if we take the August 2014 or July 2014 decline to 38.2, here's also the problem. I'm sorry about that, Jay. That's my fault. Wrong low. Stand by. Okay. Oh boy. Jay, thank you, my friend. Yes, yes, and yes. Wow. Yeah, that brings in the 38.2 right there. Well done. Well done. Boom. Thank you, sir. You can tell it's the end of the year when you have little pitchforks that haven't been quite adjusted to the new low yet. But man, that even offers more conviction, right, Jay? Even more. You're just sprinkling gasoline on it. Big region here. Okay, so dollar yen is where we were at on the near term front. I want to show you just this formation. It's disgusting how long this has continued to hold. So here's the 240 minute. This pitchfork in dollar yen. Median line support right into last week. Here's the upper parallel. Again, that's 103.40, the 104 handle, same thing. That needs to hold resistance if we are heading lower. Downside targets if we break are 102.78 and 102.38. Not a trade for me this week, or probably to the end of the year. Dollar yen is off the table. I'm not messing with this thing. But I just want to show you those levels for reference. Last but not least, we'll hit Aussie, SPX, and gold and Bitcoin. So here's Aussie, number 7. Beautiful trade, in my opinion. Again, it's very similar to what you're seeing in Kiwi dollar. Okay, here's Kiwi at resistance. Here's Aussie at resistance. 38.2 retracement. Longer term, this is off the decline from 2011. Breakout was magnificent. That was the first level. Here's your initial focus right now, 75 into 76.35, 130 pip range for the upside. If you break lower, still constructive, well above 73. Topside breach, that's really the level that you'd want to start to look for a little bit more of an exhaustive high in 78. So on reference for the weekly charts, pretty clean as far as the levels are concerned. The trade, though, or at least the initial advance, here's what it looks like on the daily chart. Again, super clean with these gradients, guys. Really, really clean slope, median line, pivot, break, acceleration, resistance, 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 break, acceleration, support. That's the level you need to close below to start or to suggest that there is a more significant near-term high in place. I think this is going to be a fake out trade, guys. I think this kind of market posturing in this liquidity environment is screaming fake outs. You're going to get a lot of noise. I feel like this is going to rip up a lot of people before it finally makes a move. Look, at the end of the day, the initial advance is at risk below 76.35 near term. You're still constructive above 73.40, which is the monthly open, the slope support, the highs that you made for the opening range in November, all right there. Bullish inval, near-term support, resistance, breakout is right into 78 and 78.30. Big levels, big region. Here's the intraday chart. So not as clean as Kiwi in that, like, Kiwi broke its channel support and checked it as resistance. This hasn't done that. In fact, in my opinion, this is a false break of channel support and a recovery back in the channel. Might not be an operative move that we're going to get a play off of per se, but the play would be, if it's going to correct, exhaustion on any rallies ahead of 76.35 and the break below 74.50 to really onset a little bit more of a decline, a little bit more of a setback within the broader advance. So that's where I am with Aussie, right? We're pretty light on Aussie data, you know, basically into the end of the year here. So we'll be looking at US data in the next couple of days. You got core PCI numbers and durable goods coming out. PCE price index, Fed's preferred inflationary gauge, the personal consumption expenditure, also on tap tomorrow. So really more of dollar event risk than anything over the next couple of days for these setups. But little disappointed here. I was kind of hoping for more play on Aussie. I think you still might get it if it stretches higher and fails into the upper parallel, but nothing really compelling to write home about right now. Okay, gold, SPX, and Bitcoin. Here's gold. Well, what can we say? Gold, my friends, came off a big region of support. 1763 was the zone. The first level of resistance we talked about was 1850. For 2 weeks, we tried to mount that. We couldn't. Last week, we finally did. Excuse me, here's resistance and near-term bearish. Excuse me, not near-term, medium-term, longer-term, bearish invalidation. Okay, so you know the advance has been 4 weeks of a lot of chop, but came off a huge level. I've been telling you guys 1909 is our bearish inval for the longest time. That's now the high. Okay, the high that we registered so far this week, right on target, is 1907. So if we're going to pull back, this would be the level, and with the same respect, a close above 1909 should fuel acceleration. I don't want to slow meander higher here. This needs to be a pivot. Okay, this needs to be a pivot. So knowing where gold is on the broader scale, okay, of things, absolutely paramount. That's the weekly. Daily chart looks like this. Okay, so basic slope off the highs, gradient of that same slope. There was the breakout. We breached higher. Yesterday we tested that slope as support, which is why for me it's all about right here. Couple things to note. If this is corrective off the low, meaning the broader trend is still down and we're just making a bear market recovery, 2 equal legs gives you 1930. 50% retracement and decline off the yearly high gives you 1920. For me, it's all about this $10 range. A breach above 1930 on a closed basis marks resumption, straight up resumption of the broader yearly uptrend. Whereas if any rallies fail into this region, you're really risking another dump into 1800. So again, I think on the advance here for gold over the next couple of days, it's going to be absolutely paramount to see how price reacts if we do push higher into that 1920, 1930 level. On a weekly close basis, 1909 would, in my opinion, shift the focus higher. What a beautiful turn. What a beautiful rally. This is the first area of real problematic resistance. Let's see what happens to gold. Here's on the intraday chart what it looks like. So even here, right, into the start of the week, the ideal scenario was kind of to see this thing pop higher into this zone and fail. So into the start of the week, it did pop higher, but boy, it didn't make it quite there and turned lower. And we're still in this ascending channel. No change to any of the updates or any of the levels that we've highlighted earlier in the week. Still looking for sort of a range consolidation break. You need a break below last week's weekly open at 1840 to shift the focus lower. 1920, 1930, critical resistance on the way up for gold. Questions on gold? All right, SPX looks like this. So we've been following this insane pitchfork, which continues to pay dividends. I don't understand why this thing just continues to hold. No one's kind of paying attention to it. It's been insane, right? So here's the turn and break, dump right into the lower parallel, right into those lows for the month. There's the rebound, right back into median line resistance. Look for a reaction here today. If it breaches, look for an accelerated rally back into 37.36. I also just wanted to highlight that we've already maxed out sort of the 618 of this near-term decline, right? Here's that 618, and we're now testing essentially this 786 as resistance, right? So look for reaction here. Again, if it breaks, that's the sort of obviously your record high. It's also the upper parallel. Break there, you're looking for slope. Remember, records territory, so anything beyond here is all slope as far as trying to ascertain targets. Near-term support at the 25% parallel. I'm still keeping rock solid that 36.43 levels. Near-term bullish inval. Insane, right? It's insane. Keep your eyes on that. Still think the risk is for a larger setback. Now, if it rips into the upper parallel, kind of this is the formation I'd be wanting to work with, right? So, if it were to rip into like a new parallel, you could see if a new high was registered, something like that would give you a pretty decent gradient with the median line being pretty much in line with the pivot we just saw. Obviously, this is just conjecture at this point, but I'm just letting you know. The risk is still there. The risk is still there. Could see a pop higher, but the risk is still there into the upper parallel here. Last but not least, a quick note on Bitcoin. So guys, we talked about a resistance level for a very long time. It was 1966, obviously the 2017 swing high. But not only that, you had slope here, divergence into the slope high, the pullback pulled back, right? Didn't even make it into the median line. Look what happened when we cracked 1966. And this is the validation and the conviction that you look for to validate the move. 1966, crack, went right into it. 21,275 is the first level of 618. Second target is 23,777. That already hit. Final target is 25,385. That's just a bit higher than where we are now. The pullback, near-term support now back at 21,2075, and bullish inval right back at the breakout zone. So 19,666. If we break below that, I think you risk a way larger washout, but all things held constant, trade remains constructive while above that zone. So I'm sure there'll be a lot of discussions about Bitcoin around the Christmas tables and the holiday tables and New Year's tables this month. Know that it is a legit breakout. It's already made a move. Right now, the biggest risk heading into the 2021 Open is that topside exhaustion for this stretch. Ultimately, a buyback or a pullback is to be bought, but at this point, it's a very mature trend. Questions on Bitcoin? All right, well, guys, that wraps up the webinar for today, and our webinar is for the year. I want to leave it open for any other questions. If not, I want to thank you guys all again. 8th year running, is it? 7th year running for us, keeping SB an engaging, fun environment for real traders to come in and really just talk markets. No fluff, no nonsense, no headlines and fundies and, trying to work out the rationale, the story. We don't care about the story. We care about the trade. We've always cared about the trade, and that's always what we're going to be focused on. So thanks again for helping us keep this service running, and thanks again for an awesome year. Best of luck to everyone into the close of the year, guys. Keep it light. I'll try to keep the updates coming. Tonight will be the last update this week, but next week I might drop an update or two based on what the markets are doing. We'll start back in earnest heading into January 4th. So till then, best wishes. Same to you, Jay, Ted, everyone in the room for the new year. Happy holidays, a Merry, Merry Christmas, and we will see you all in the new year. Best of luck trading, guys. Cheers.